Hi everyone. Today we will then learn about how to adjust a cash book whenever you deal with banking reconciliation. There's no way that you can complete the reconciliation without adjusting the cash book. The main importance of doing that is ensuring that you track transactions that have not yet been recorded in the cash book or transactions that have been recorded incorrectly. So let's start. Right. Remember that what you want to do is comparing the cash book with the bank statement. And that is what helps you to identify the errors and also record transactions that are not there. That is the only way in which you can adjust your cash book balance. So in summary, what you are doing is making changes and adjustments, but those that are correct. You want to make sure that the cash book agrees with the bank statement. And this process requires that you have a good attention to detail skill and able to capture little things that are hidden within your journals. Suppose that now you want to capture these errors, right? What you want to do in your journal is to capture whether the bank charges have been corrected for that month. What are bank charges? Those are the charges that are charged for banking services. You also want to make sure that you check whether interest that the business receives from either the investment has been recorded in the income. You also want to ensure that you check deposits, any EFT receipts. EFT receipts can be received from customers, yes? And you also want to make sure that the bank knows these little things or other errors that you have identified. Right, now to look at the payment, you want to check again banking charges. Are they there? You also want to ensure that you check debit orders. What is a debit order? Remember, a debit order is what occurs every single month. It's repetitive. And with this, you want to ensure that should any changes occur, the adjustments are done correctly. Same applies to your stop orders and dishonored checks. What is a dishonored check, right? This is a check that has been rejected by the bank and could be due to different reasons. Sometimes a check does not have a signature, and that is why it's rejected. Sometimes the person that is paying does not have sufficient funds. So at some point, maybe the text within the check is not visible. So there are different reasons why a check can be dishonored. So these are some of the things you need to think about as you do your recon. How do you identify things that could be correct? Step number 1. You need to compare the cash book and the bank statement. This is just a summary. Step number 2, you need to check the descriptions, the dates, the references, as well as the names of the people, and those we call payee. Number 3, then you need to classify your work correctly. By doing so, you are completing the adjusting your cash book step of reconciliation. Always make sure that you tick off what you've corrected. That helps you to understand what is left off to do. I've talked about the step of comparing both the books and the bank statement. And once you are done with this, right, that is when you can fully now do the bank reconciliation itself, which I have talked about in the previous lesson. But just to give you a brief, a bank reconciliation is when now you correct the external party. In this case, the external party is who? The bank that the business is using. Otherwise, thank you so much, and I will see you in the next lesson.